What's up, everybody? Let me just fix my camera here. Welcome to, there we go. Welcome, everybody, to Masters in Trading Live. My name is Jonathan Rose. I'm the founder of Masters in Trading. Every single day, we're going to be joining you at 11 o'clock Eastern live, where I'm going to be sharing my best trade every single day. We're going to share a few lessons or pointers, and then we're going to share one trade every day on Friday. If you go back, watch the videos, we went over all the trades of last week. Today, I'm very excited because if we were all together and we're all hanging out and you said, Jonathan, what's one thing that you think could help investors, traders? What's one thing that you can help people just optimize the return on their trading account? And this is it. The number one thing is going to be to learn how to properly express yourself. Well, what does that mean? Well, let's say you had a really good trade idea. Let's say you tell all your friends. Everybody gets involved. You love XYZ. XYZ goes up 50%. You don't make any money. Maybe you took a stock position, but not too confident because you were more confident telling everybody than actually placing the trade yourself. What I want to show you is not only how to have an opinion, but how to optimize the return of that opinion. I want to teach you how to express yourself in the market. Second topic is a divergence trade. Selling one thing, buying another thing. And then finally, the trade today is going to be in uranium. Now, for those of you who have been following, great job. Thanks. Last week, we did recommend a uranium trade in CCJ. Today's trade is going to be synergistic with the trade from last week. If you're not in the trade from last week, today's trade is still going to be fresh. But I want you to see how it's synergistic, how the trade is going to help manage the trade from last week. So without further ado, let me teach you how to express yourself. Here we go. Okay, bear with me. We're going to be here for a little bit. I put together the quadrant. Bullish volatility, bearish volatility. Bullish volatility, I put a roller coaster here. Bullish volatility is craziness. Volatility is the expectations that we have on the market. So when you're bullish volatility, you expect craziness. When should you be bullish volatility? Well, going into non-farm payroll, going into a big number, going into a big catalyst, going into an election. Bearish volatility. Whenever we're bearish volatility, we want the market just to go to sleep. We want the market to chill out. We don't want anything to move. Bullish roller coaster, bearish nap time. Here we're going to have bearish direction. Here we're going to have bullish direction. Now, where people get this wrong is they might be bullish something, so they want to buy calls or buy the stock. What I want to show you is there's different trades that are going to help you efficiently express your opinion. And that's really what I can help you with most as we go through these videos. So we have bearish direction, but your bullish volatility. Here, your bullish direction. You're also bullish craziness, bullish volatility. Bearish direction, bearish volatility. Bullish direction, bearish volatility. Let's go through each one of these. The first one that we're going to talk about is bearish direction, bullish volatility. When you're bearish direction and bullish volatility, what can we do? Well, bearish direction. When you're bearish direction, you could buy puts, making a bet for the stock to go down. When you buy puts, you're also buying options. Whenever you buy options, buy a call or you buy a put, you're buying volatility, you're buying craziness. So we can buy puts if we're bearish. If a stock's at 10, we buy the 8 strike puts, you're getting short from 8. Why would you get short from 8 when the stock's at 10? Because you get massive, massive leverage. Bearish direction. We could also do debit spreads on the put side. Buy a put and then sell a lower price put. That's buying volatility, and that's also bearish. Now, if we're bullish direction, we think a stock's going to go way higher. Not only are we bullish direction, we're bullish volatility. Now, when would we be bullish direction and bullish volatility? When there's a catalyst. Again, whenever you're buying options, there needs to be a reason for movement. Just thinking a stock is going to go higher is not a way to get long volatility. So bullish direction, bullish vol. You can buy calls because you can buy options. You could also buy a debit spread. Same thing. If that stock's at 10, you could buy the 12s and sell the 14 strike. These would be the calls. And that would be a debit spread on the call side. Now, what if we're bullish direction, but we're bearish volatility? Now, funny enough, this is probably what happens most often, and it costs traders a lot of money. If you're bullish direction and you're bearish volatility, the stock market's going higher. When you buy stock, this is bearish vol. Okay? This is bearish vol. Why? Let me explain to you why. The stock market today, if we go 500 points higher in the next week, it's going to be because there's no bad news. Everything's chilling. Volatility is going lower. When volatility goes lower, markets trade higher. So if you're bearish volatility, you could also just get long stock. That's a great way to get into a low vol position. What else can we do? Bullish direction, bearish volatility. We could sell options now. Sell puts gets us long. Sell credit spreads. Whenever we're selling an option, we're bearish volatility. Whenever you're buying an option, you're bullish volatility. The last one, bearish direction, bearish vol. Think about this. Bearish direction, bearish vol. You know what this is? This is Fugazi. Isn't that what they say, Fugazi? It doesn't exist. It's made up. Bearish direction, bearish volatility. How does that work? You think the stock market's going to crash in a low volatile environment? Nonsense. This doesn't exist. So we have 3 quadrants that we really could trade. Now, why is this so important? Volatility is really what drives the market. Traders need to make 2 big decisions when they enter a trade. Direction. You want to be long, you want to be short. But the other thing is you want to be able to efficiently express your opinion. And that's why it's so important for options. If you think the market's going to move, if you think that there's a catalyst coming up, make sure you buy options. If you think everything's going to be calm, you could sell options or just relax because the stock market's going to go much, much higher. Let's go into the next example. And this next example is going to walk you through what we call divergence. And this is about trade management. Okay? Uranium, yellow cake. We've been bullish uranium for a while. 9/10/2021. Guys, this is the way that I say I'm really bullish uranium because I'm sharing LEU, 4Us, DNNN, CCJ. Take your pick, guys. They are all going higher. And we did this trade. I shared this 9/10/21. And this trade is 4Us. Here's the thing. 4Us, we were buying it under 1. Right now it's trading 6. That's a phenomenal trade, right? But what about all of this stuff? What do we do for this? Do we just get long and sit on our hands and not be able to partake? No. Take your pick, guys. Long, they're all going higher. We're just looking at the 4Us, right? Well, if we look here, this is LEU. It's kind of not showing up great. LEU against the 4Us. Green, white. Overall, guys, it's uranium. They're moving together. That's the whole idea of trading things like this. They're moving together. It doesn't matter which one you buy, but what's important, and Tom does it perfectly, Tom T, by the way. Tom does it perfectly. He closes out on 6/1/2023. He closes out CCJ. Now, CCJ is not on here. This should have been 4Us. But nevertheless, 6/1 is when he decides to buy LEU. And the whole idea, and this example is supposed to be this, if you're long one, get out of the other one and get long the cheaper one. All uranium, we're just looking at different ways to express our opinion in uranium. You can do this with all the uranium stocks because they are extremely highly correlated. We are still bullish uranium, bullish yellow cake. Pretty obvious because last week we shared a trade in CCJ. Now, go back and watch the video, please. I want you to see the trade. The trade's doing great. CCJ, we shared a 41, 43.50 last. Today's trade is going to be in CCJ as well, but it's going to be a little bit different. So let me take you to the slides. And here's the trade idea. And the trade idea is going to be today and CCJ. Now what I have here is we just have the expected move. So the options expected move every single month. The options market makers expect the stock to move this much. If it moves outside of its expected move, long volatility holders are going to win. If it stays within inside of its expected move, short volatility holders are going to win. CCJ stays within its expected move 76% of the time. When we shared CCJ last week, cool, we liked the trade. We shared the trade. It's got 130 days until expiration. We have time. But we got a really, really quick move out of CCJ. We want to get on prints. When the market moves, we don't want to just sit on our profit because it could go away, right? So an awesome trade is to make a bet that CCG sells off right here. Now, why would we want to do this? Well, for those who did the trade last week, this trade is an absolute no-brainer because it's synergistic. And what I mean is it gives you a little bit of protection. Right now, April 25 days, the trade we shared last week is 125 days. What I like to do is sell the 46 calls for $1 or so right here. And then you buy the 50s right here. Say you buy those for 30 cents. If you do that 10 times, that's a $700 credit. Why I like a short volatility trade in CCJ right now is because today is 325. 329, market's closed. Options are still going to decay. So because we're walking into a holiday weekend and we have long exposure in CCJ, I would think that volatility goes a little bit lower and CCG sells off. I would not touch the trade from last week. This is a brand new trade. This trade is just very synergistic with our portfolio. Every single day, 11 o'clock Eastern, I'm going to hop on here after researching the heck out of these trades, and I'm going to share my very best trade for the day. Now, let me leave you with this. I'm a big, big fan of looking at the market from a little bit different lens. Look at things different. Be creative. We say the creative trader wins. My name is Jonathan Rose. Trade smart. Thanks for watching.